Hey everybody, David Cristello here, founder and CEO of Jetpack Workflow and host of Growing Your Firm podcast. Today is a returning guest. Are you three-peat, four-peat, five-peat? I don't know anymore. He's been on so many times, maybe three-ish. Every time he comes on, he opens up the eyes of our audience of what they can do with their firm, and it's none other than Rob Nixon. He's with Profitable Partners, and he helps accountants all over the world make over $1 million in profit per partner while working less than 500 client hours. Now Rob's been on the podcast multiple times. He's written many books. He's had a lot of great templates and guidance and facts and figures. But today we're going to be talking about what's really going on behind the scenes with accounting firms. And the reason Rob has that data is because he's been able to pull together one of the most comprehensive benchmarking reports for accounting firms. But having said that, Rob, welcome to the show. Welcome back to the show.
Yeah, David, great to be here. Every couple of years we do this, so this is good. Looking forward to it.
Classic refresher. I hope at one point I get to call in from my own golf course as well. Like that is then I know we've both made it, right?
Yeah. Well, I just to cover up, I did build, according to Golf Digest, the world's best backyard golf course. So if you just Google world's best backyard golf course, you'll find me on there. It's one of my passions, my main passion, actually, other than accountants.
Yeah, I love it. It's fantastic. If you haven't seen the video, go check it out. I'm trying to think, what is the backyard thing I can do now, right? Is it dirt bikes? I'm not a big dirt bike person, but trying to think of like a hobby. I mean, I just think you really cracked the code in that video.
Yeah.
But I know we certainly talk about golf here a little bit, but for folks not listening, I gave you a quick intro. Can you quickly articulate what you do and who you do it for? And then let's dig into this benchmark report and some of the validating things that you've seen in a lot of the work you've done with accounting firms, and maybe some of the surprising stuff as well.
Yeah, so I've been working exclusively with the accounting profession for 28 years, started in May 1994, which certainly ages me, just over 50. And 18 countries I've physically worked, but I've coached about 200, sorry, I've trained about 200,000 accountants, coached just over 600 firms one-on-one, and that's my main business today. And so I get a big insight to the firms that we coach, which are definitely different level performers than the entire profession. But last year, I decided I'd revisit a tool that I developed many times here in Australia, but mainly in the USA and Canada on benchmarking. So let's get a whole pile of data. We had 293 firms register for it. Let's get a bunch of data, and let's not just our clients, of course, but a wide range. We capped it off. They were from $1 million to 10 million in revenue. The reason for that is because over 10, the numbers get distorted down a little bit. Under $1 million, they get distorted up a little bit. $1 million to 10 was the number, and we had a great sample size, and it proved a lot of things, a lot of surprising things as well, David.
Yeah, well, okay. Punchline: are U.S. firms better or worse than Australian firms?
That depends.
Okay.
That depends. They make more money per partner, which we'll get into money and soon profit. With that though, so if that's a level of betterness, they work longer hours. So our Australian firms work less hours. So I think the Aussies beat you there. As far as margin, although the revenue may not be higher. The profit per partner is slightly lower in Australia. The margin of average hourly rate is much higher in Australia because we've taken a different view on how we produce margins, so which we'll get into as well.
All right, a lot to unpack there. Very diplomatic answer, Rob. So I think you ran that the right way. So you mentioned a couple there already. I mean, I'll leave the mic to you. Where do you want to begin? What's the one that was either the most interesting or the most contrarian as you kind of pulled this together?
Yeah, so these were the 2021 calendar year or fiscal year numbers. First one was profit per partner. The lower quartile, so the 25% or less, 25% mark, was an average of 250,503. So sorry, at the lower quartile result. The median result, so halfway, which was the surprising number, was 419,827. So halfway was 420,000. Upper quartile 609,000, and the best result was 2.1 million for a sole owner firm, actually in Florida. So it just shows that that particular firm, we interviewed them a couple of years back, and I said no to them for coaching. I said, you don't need our help. You're doing everything great. Even leading up to the benchmark report, wanted some help. I said, look, you don't need our help. Just keep doing what you're doing.
Go buy some real estate. Go put this cash to good use somewhere and keep going.
Yeah, so it just shows that 2021 was a banner year for sure, and 2020 was slightly less than that. The COVID years have been very, very good to the accounting profession.
That's really interesting. So you said 419 was
median.
Low, median was lower than you thought. That's not
higher
than you thought. Okay.
Yeah, I thought it would come in at about 330, 350, and it came in at 419, which is awesome. But even that number, right? So $400,000 with corresponding, the cost of living has gone up dramatically as well in the last couple of years. It's a comfortable number. It's a good lifestyle number, but it's not a wealth creation number. And that's before taxes and that's before working capital as well, because that is profit before partner salaries or benefits. So, and there's tax to come out of that, and there's working capital needs as well. So partners are living a comfortable life, but in my view, unless you get up to $750,000 or over $1 million, they're not building a real wealth creation life. I'm interviewing some firms today actually, and one of them, Kevin Bassett, a firm we coach, he got to $1 million profit with us after year two it was, yeah. And then he said, now I'm building generational wealth. Lifestyle needs are sorted, debt, housing, cars, all that sort of stuff. Now I'm building generational wealth. And at 400,000, it takes a long time to build generational wealth at $400,000 a year.
Yeah. Well, that's what I was wondering, if you're doing $250,000 or $750,000, what is it about that number that really tips the scales for wealth creation? I think, obviously certain people were going to get to comfort level. Yeah, I'm good. And that's okay. There's a lot that are there. I'm assuming if you're listening to the show and you're crazy enough to listen to a podcast for accountants, you want to do more and you're looking for angles every which way. But I guess, what is it about that number? Is it you could reach a certain investment level typically in a given year, so you could start building a giant investment portfolio? Or how do you unpack that number as being
okay, so first of all, partners in accounting firms stay in the profession for a long, long time. It's not like build a business up and sell it and start an entirely different business like a lot of entrepreneurs do. They stay there. And partners of accounting firms have made good money for a long, long time, good, solid money. I did hear a stat years ago that it was the highest profit percentage business in the United States. Great, right?
Yeah.
But typically they're small businesses, so may have a high profit percentage margin, but you can't eat that. You've got to eat the cash, right? And do something with it. So to me, the objective is more than a comfortable lifestyle. And this is the killer, David. This is the killer. I coach accounting firms. I coach them. Our pitch is to help them get more than $1 million profit while working less than 500 hours for the time and money balance. But we come across, everything's okay. Everything's cool. We're sorted. Yeah, okay. You're making $300,000-$400,000 profit per partner, and it's sorted for lifestyle, but not much of it's getting tucked away for the future, and don't expect a massive payday on the sale of the firm. So, there needs to be a much bigger number so lifestyle needs are met, and then maybe put $300,000-$400,000 a year into investment portfolio, stocks, bonds, property or whatever, so that at some point in time you can stop doing this hamster wheel and do something else, or retire, or sit on a beach. And I meet so many firms, the partners are well into their 70s and they're functionally good, but they're still working crazy hours. And this is the balance between profit and time as a partner, and you can have it both. You can have it all.
Yeah, that's just it. I think with that lifestyle is kind of a trap, right? So you're like, oh man, I'm living that lifestyle I wanted to live. Then you can never get off the hamster wheel. Or by the time you get off of it, you're 70, you're 72, 73, 74. You're like, man, I wish I could get off. I wish I would have gotten this off when I was 60, 55, 50. I
Yeah.
don't know. So, um, interesting. Well, you mentioned the Australian firms think about margin differently. So I'm curious to kind of unpack what you meant by that.
Yeah, so margin of average hourly rate. So margin for bang for your buck. The United States, more so than Canada, the United States market is very much a labor-based market, as in let's put more hours into this, let's work longer hours, and we'll get a bigger result. And yes, you work longer hours and you charge an hourly rate, you'll get more profit. And typically the partners are holding up the profit. Interesting, talking about margin and partners, if you took away the partner's contribution of the revenue. Let's say you're a $2 million firm, you got two partners, and each partner did, say, 300, 400,000 in revenue themselves, right? Their personal exertion. You take that away from profit, and how much profit is left? Because the partners, it's all profit, right? Because it's profit before partner salaries. And so this is the crazy thing. The partners are too engaged in work, and so consequently, the hours are high and the revenue may be okay, but typically the average hourly rate, the net contribution margin of time is typically low. So for example, the lower quartile results was $98 an hour, right? And these are $1 to $10 million firms.
Wow.
The median result was only 141. So 141 median result. I've had mechanics charge me more than that. I've had builder contractors charge me more than that. I've had a massage therapist, a sports, charge me more than that for an hour, right? Not valuing one's time and not tracking the margin of average hourly rate. The upper quartile was 169. Now, the best result was 377 Yahoo. But if I did that in Australia, the median would be more like 220, 230, $80 or $100 more, because we've definitely in Australia, mainly, I presume, mainly American listeners, David, or where are we going to? Mainly?
Yeah. Large amount of American listeners.
You'll love this one. The standard working hours in an accounting firm in Australia is a 37.5-hour week at 45 weeks for the year. That is 1,687 is standard with no overtime. You will never see
47 weeks?
45
weeks. So they do all this while working part-time is what I'm hearing?
Yeah, pretty much. So we've got that bit right? You will never see an accountant in an office on a Saturday or Sunday. It just doesn't happen, right? So of the 52 weeks, 4 weeks mandatory holidays for everyone. That's a minimum. There's about a week's worth of paid sick leave if you're ill. So we're down to 5 weeks. And then there's typically 10 days or thereabouts of public holidays. So it's down at 45 working weeks, right? So 1,687 worked hours. That's not productive. That is worked, as in you've turned up. Doesn't mean you're productive. So a typical accountant would do about 1,200 to 1,250, maybe 1,300 at a push hours for the year. Partners, nowhere near that. And so you correspond that with the craziness of the US market, and you're a slacker if you're not 1,800 hours. So...
Yeah, I mean, holy cow, what a big mindset shift. I mean, is that one of the hardest things? I mean, I know we're jumping off the benchmarks here, but is that one of the hardest things to get firm owners to be comfortable with? Like, your identity gets locked in with the grind, with working, doing the march 60 hours a week, tax season 70 hours a week. You're grinding on Saturdays, but that's part of what you signed up for. That's a job. You wear it like a badge. And I guess you gotta
but let's flip it, right? It's a very tight labor market right now. It's a very tight labor market. So what if your firm had worked out the riddle, and we can help you work out the riddle of the maximum hours per week all year is 35, maybe 40 hours, maybe 35, right? And you promote that to the labor market. I'm pretty sure some accountants that you want to hire, some tax managers or whatever, that they would jump ship for 20 hours a week less, average.
Absolutely. I mean, you really have to have your stuff together to then confidently say, I can still run the business I want to run from a revenue and profit perspective, but still say I'm going to cap you at 35.
Yeah, but that's flipping the model around. Instead of a time-based billing business, hours rate equals price, right? You flip it around and say, well, that's the price. Let's get as efficient as we possibly can. Let's employ methods and tools and resources to halve the time, which is possible. We've seen it so many times. And if the price is that and you halve the time, the average hourly rate goes through the roof. And so, but you also get the capacity. So you get the capacity of, well, you've got a choice now with that capacity. Do I refill it with additional work, new clients, new services? Or do I fill half of it and just reduce the hours of every single team member? So it's a complete mindset shift, and it's a better one for the entire workforce. So average hourly rate, you think about, I've got a $5,000 job, and if I take the median result, I'll call it, let's do $4,500 job. Median result, 141, call it 150. If I've got a $4,500 job at a median average hourly rate on my numbers of say 150, that's a 30-hour job, right? So, but if I still have a $4,500 job and I take that 30 hours down to 15 hours, then my average hourly rate is now $300. Yep. And then, so I've got a higher average hourly rate and I've got 15 hours of capacity. Now it's a decision, what do you do with the capacity? And so if you're into time and money, then take half the money and half the time. So refill that half of it and then give half of it back to the team. So work less. Wow. So it's a business model flip, and the metric that comes out at the end is average hourly rate and capacity by being more efficient. And it's possible. Seen it so many times. Here's an example, right? So the big surprise, one of the big surprises was cloud accounting adoption in this benchmark report. The median result was 29%. Now, don't get excited, cloud accounting providers, that is the entire profession, because often people who go into benchmark reports are typically higher achievers anyway, right? But that, to me, that's a very good result. 29% median result for pure cloud, not hosted. So I'm talking QBO or zero, pure cloud, 29%. In Australia, that's more like 60 or 80%. We need to better firms. We're ahead of the curve in the technology for sure, have been for years. But that's a great result, considering that is one of the factors in getting more efficient in your firm to reduce the time to get more capacity and grow the margin. So
as a side note, and I know we got time. I think we got time for maybe one more stat, but it always surprises me. I was on I was given a CPE training earlier today. How many folks are using spreadsheets to manage workflow? It's always 60, 65, 70%.
No.
Yeah. And so, people might be listening. People might be listening. I mean, it's not like it's legacy systems. I mean, we asked about legacy systems too. It's spreadsheets. And so it's like seeing 29, it's like, wow, there's still a lot of room here, for these players to get market adoption. But then, like you said, it might be trended up a little bit because the people that go into these benchmarks are a little bit more forward facing. So it could be lower. I mean, these numbers always kind of surprise me, and they continue to surprise me. What's one more, if we can leave the audience, one more thing from the benchmarking report, and then we'll talk about how they can grab a copy or connect with you. What's one more that surfaces for you that you love to talk about?
Yeah. So this is a little pet favorite. I am not an accountant. I left school when I was 16, but I've always been good at numbers, right? I've always been straight A. I was a straight A student at maths, and I can do arithmetic in my head, that sort of stuff. And what surprised me with all these accountants, and this is a numbers-based benchmark report, so many didn't know their numbers, right? So we got them to fill in like online form, and we had 2/3 at least. We would have to go back to them and say, that number doesn't look right. Can you go back and check it? Oh, yeah, you're right, Rob. That's not right. So that not knowing their core numbers, just because they're just operating business, being busy, rather than, and there's 3 levels here, David. There's being a practitioner, practicing your craft. Level 2 is where you are a business owner of an accounting business. And level 3, where you become an investor in your own accounting business. And as a result of that, the hours per partner reduce as you go up, right? So eventually getting to zero chargeable time per partner, you still own the equity, so you're an investor, right? But not knowing your numbers, not knowing, so how many sales meetings did you do? I don't know. What was the average daily rate? I don't know. What was the time under budget? I don't know. I know what the revenue was and the profit was. I know what the accounts receivable were. That's pretty straightforward. That's just balance sheet and P&L stuff, right? But the internal numbers that drive the performance of the business, that was a big surprise. And it was an annoying one because it took a lot of work from our side to get the right numbers. But, the more you know your numbers, the more you can change them. Yeah. So that was another one.
Yeah, well, kudos to you and your team for tracking down these either blank or erroneous looking numbers, right? Because I'm sure there was a lot of, I don't know, it's 9 p.m. I don't know, 400 an hour, and you're like, that would put you in the top 1%.
That's
like,
right.
and nothing else is indicating that you're here. So we just politely sanity check this. Well, Rob, it's always a treat to have you on. There's a lot more data. I didn't know you even were looking at data from the cloud adoption perspective. So I'm excited to grab a copy. I know our audience will be excited to grab a copy. What is the best way for them to reach out, connect with you, grab the report, take a look at it?
Yeah, so go to robnixon.com, robnixon.com. Go to robnixon.com, have a mooch around there. And if you go to the resources tab, or actually says free stuff, there's a lot of downloads on there. You can actually download my latest book for free. There's the benchmark report. There's a cool strategy roadmap. But on the free stuff spot, all free. So yeah, and we want to give, David, we coach a small amount of accounting firms every year. We can't help everyone. So we give a lot of content and tools away to those that either, are too big for us or too small for us to help. So yeah, go to robnixon.com.
Amazing. There's I won't name names, but there's obviously places where you can go and you can download a report like this. Probably cost you about $500, $600. So big shout out to people listening. I don't know, maybe Rob will turn this into $5,000-$6,000 downloadable report. We'll see. In the meantime, he's crazy enough to let it go for free. So robnixon.com, free resources. I've paid for reports like that and I've spent hundreds of dollars. So huge value. Go check it out. If you enjoyed the episode, please leave a 5-star review. If you really enjoyed it, share it with a friend that needed to hear, a fellow firm owner that needed to hear some of this content, some of these insights. Of course, we're going to do a full write-up. We'll do full links at jetpackworkflow.com/blog, jetpackworkflow.com/blog. Rob, as always, great to have you back on, and thanks for sharing the time today.
You're welcome. Thank you.